So, folks, I don't know if you're living under a rock or not, but come June 14th, we will get another Fed rate decision. We also will get another CPI reading on June 13th. I wanted to ask the one and only Justin from Kearns Capital where he currently sees all of that going. Justin, how you doing?
I'm doing great. How are you?
Awesome. I'm doing wonderful, man. I'm just wondering where your mind's at. I'm sure you follow the macro economy. I'm sure you're following a lot of the economic cycles. Just for what you do in your personal investing. Maybe you're doing some of that for Kearns Capital. But obviously on June 13th, we get a CPI reading. I think it will be an important reading. I'm curious, do you have any thoughts on what it might be, or where it might be compared to last time? Do you think like that, or you stay away from that kind of conversation?
Oh man, it's so interesting, right? Because I don't even know if they're telling us the right number. They keep changing they keep
They keep
changing the
changing the
rules on what's
formula. Yeah.
included and what's not included. It's like,
Two
do we
years,
even
one
have
year.
like is any of this data even real anymore? It's like
Yeah.
it's very difficult, right? I mean, where they've been saying inflation is, it feels a lot higher than what they say. I think we're dealing with much higher inflation than what's being reported. There's all these forces that are new. I mean, the amount of people that have figured out how to make money online that don't want a job anymore. It's like this economy underneath the economy. Like I see people doing well, and it looks like things are about to fall apart. So it's
Right.
just strange, right? Inflation is helping the people with assets. It's
Mhm.
hurting the people that the cost of goods is the number one determination of their
Mhm.
livelihood. It's just a messed up situation, and I don't see how it ends well.
Yeah. It's really funny. Yeah. Cause again, they've done a lot of if you go back and you take the inflation calculation from, I think, 1970, it might be 1980, and layer that on today, it's like 11 or 12% or something much, much higher. Then they go later this year or earlier this year, they go, we're not going to use 24 months. We're going to use 12. They do seem to be gaming the system. But that said, we got a number coming out. It's going to come out. I think the last reading for CPI headline was 4.9, core was 5.5. I'm sure but we'll do this for the audience. CPI is calculated on a rolling 12 months, which means we're going to roll off the last month, you know, whatever it was, May of last year. And that was a huge month, something called the base effect. It's the largest in the 12-month series. So I actually have a sneaky suspicion, Dustin, that the reported number, whether you agree or disagree, or think it's a big fat lie, could come in sub 4.5.
Mm-hmm.
And I think that will be a 10 or 11th month trend. I think the Fed will kind of do a happy dance that they're winning. Um, how does that feel to you? Given what I've just said.
The way it feels to me is that if their inflation target's 2%,
We're
now we're
halfway
all
there.
almost halfway there. So what do rates have to go to 20%? I mean, what are we doing here?
Yeah. Yeah. It's pretty interesting. So again, let's just play for a minute. We're jumping in the DeLorean and we're going into the future. We're going to say that the 13th comes in at, let's call it 4.4. You're now at the Fed. You have positive rates. We haven't had positive rates forever, right? Because the funds, Fed funds is 5 to 5.25. We're at 4.4, I think I said. Um, if you were Powell for the day, would you vote to raise rates another quarter point? Would you go higher, maybe half a point? What would you be doing, Justin?
you know, um, I would probably pause and let this thing play out. I mean, markets are pretty stable right now. I mean, S&P is not going crazy. It hasn't fallen out. I mean, it's pretty,
Trading range, yeah. Yeah.
yeah, I feel like we're in a good spot to let this market hang out. I think if you bring rates any higher, you're gonna cause a complete crash in real estate. I think
Yeah.
we're on the
I,
brink
I,
of that. We got to be careful. Like let this thing catch up. I could even see an argument to cut rates.
yeah. I think a pause is on the table. I've been very clear with my audience. And I think we pause all year. There are some people talking about a skip, right? We pause this time, raise next time. I think your last point is dead on. The financial system has some cracks and fissures. There will be companies that go bankrupt. There will be deals that go bad, but all of those I think could be handled under the normal system. If you force this to what Jamie Dimon said, 7% Fed funds, watch out. Can you imagine a 7 Fed funds? What that would do to commercial real estate? It would be like an atomic bomb, I think.
it's the entire market, because you also have to remember this is about jobs, and a lot of these companies use debt to employ and keep their companies going. And if the cost of their capital is going up, what's the first thing they're doing? They're getting rid of bodies.
Oh yeah, overhead. Yeah, yeah. If you take Fed funds to 7%, like Jamie Dimon feared, we could end up with 5 big banks. Because I mean, the whole commercial regional banking system, credit unions could implode at that. And maybe that's what Jamie Dimon wants. Maybe he wants Bank of America, Wells Fargo, Citi, Morgan Stanley, JP Morgan. I don't know. Goldman Sachs. Maybe they only want Wall Street banks. I just can't imagine 7.
It's all pointing to a nationalized banking system to me. If you want to roll out a digital currency, if you want to do all these things, you need consolidation and you need buy-in.
Yeah.
So, I mean, what better way to do that than to tank all the small banks and have the big boys just swallow them up, and then you can implement your nationwide strategy for your digital currency.
Justin, man, come on. We can't. It's one of the things I did in my career is obviously I traveled around the world a lot, so I spent a lot of time in Europe, Asia. Let's just say most countries don't have thousands of regional banks. They're usually 2 or 3 kind of national banks. One of the strengths I believe in the U.S. economy is the regional banks, because they can get to know you and invest. If we go to 7, over, gone. Not won't survive very long, I don't think.
Yeah. I mean, even if you look at 2008, right? I think it was something like 500 banks went down. I feel like the risk in a credit sense is right there.
Yeah. And again, I don't think, even if we keep it at 5 and 5.25 for the rest of the year, I still think there will be some banking failures. But again, some is not all, right? I think 7 gets really close to all banks, minus the big too big to fail. Anything else we should talk about as we get ready for some important inflation numbers coming up the rest of the year?
I mean, I would just say on this banking topic and the inflation situation, where can you protect yourself? Like some good action items. I mean, I'm looking at the simulations of 2008, and 0 life insurance companies went down. So for me, I'm like, well, why don't I work with somebody that can do a very certain type of structured whole life, where I can put my money there instead, and I can borrow 90% of the cash value and have an investment that grows. And now my money's not in a bank, right? So it's just something to think about, an alternative strategy of where you put your money first. If I put it in my life insurance policy instead of a bank, my risk of losing capital pretty much just disappeared.
Very cool. I did not know that about the 2000s. Where can people find out more about you, Justin, and Kearns Capital?
So the website is kearns.capital. My personal website is toptierhuman.com. And we're all over social media, Justin Freistadt and Kearns Capital.
Awesome, buddy. Thank you so much.